Okay, so I just wanted to make a video walking through my portfolio. And for anybody who didn't know, this is what the dashboard of Questrade looks like. And these are the three accounts that I have opened through Questrade. I have my tax-free savings, my RSP, and my first home savings account. I haven't really seen a lot of videos on YouTube of people really going through how they structure their accounts when they're a bit younger. I'm 24, and I think it could be valuable for a lot of other people to see how to do this. I've had to teach myself how to do pretty much all of this, and I haven't really seen on YouTube anybody just diving through all of their accounts and the holdings that they have and sort of their thought process as to why they invest in what they do, how they allocate their capital, and how just kind of the overall structure of their accounts is. So I decided to make a video, and let's just start going through the account here. So this $47,000, this number right here is the total across all three of the accounts that I have opened: the tax-free savings, RRSP, first home savings. I started investing in January 31st, 2020, opened the account with $1,000. I think it was the first stock I ever bought was Nvidia. Unfortunately, I did sell that at some point, so I didn't I didn't ride the recent wave of Nvidia investors, but that's investing. I've contributed a total of $42,000 to the account, and in total, I'm up 13%, so not bad. It goes up and down. Recently in the last like 10 days here, I was up over $50,000. The first time my investment accounts were combined total was up over $50,000. And then, yeah, we just went right back down. But so this is the total across all accounts. We'll go through each one individually, starting with the tax-free savings. And if I ever make videos in the future, it would probably be talking about my tax-free savings account. It's the exciting account. It's the big dog account. It's where all my stocks are. And it's the one I've been managing the longest. So yeah, let's just get into it. This is going to be a brief overview of what I hold in the accounts. I don't want this to be too long of a video, so I'm going to keep it pretty high level. And, if maybe I'll make more videos in the future going into more depth as to like my bullish thesis on specific positions. But yeah, we'll just kind of start from the top. I think this is sorted by market value here. So the highest percentage holdings at the top. This is VOO. So this is an ETF. It just tracks the S&P. And, I like having this as the highest percentage holding in the account just because it's kind of brings some stability and safety into the portfolio. I have made the mistake and learned the lesson of just holding growth stocks is good when the market goes up, but when the market crashes, you can really lose a lot of money. So as I've kind of grown as an investor and made mistakes along the way, I think one thing that I've learned is it's not a bad idea to hold a relatively high percentage of your portfolio in ETFs just for the stability, depending on how much time you're dedicating to research and managing your own portfolio. For me, my comfort level is to have, I have $8,000 USD just in this singular ETF. It has a low management expense ratio, which is nice. And yeah, it's about 30% of my tax-free savings account. With Questrade, it's also free to buy and I think sell, maybe not free to sell ETFs, but it's free to buy them. So yeah, that's kind of my thinking just behind holding VOO there. So Meta has kind of grown into one of my bigger percentage holdings. My cost basis on it is $253, and the stock's grown to $481. which it has also crashed a little bit lately. I believe it was over 500 here, or maybe not quite over 500. Oh yeah, around 520. So I don't know. I think Meta's a good long-term holding. It's Facebook makes so much money from ad revenue. They also are a leader in AI and technology hardware like Oculus and virtual reality. They are just one of the tech leaders, and I can't see them going away anytime soon. They really do lead the market, and they create new technology, and they're an innovative company. They have good branding. Yes, one of the risks with them is they are always in legal battles. The government might step in one day and try and break a company like Meta up. So that's definitely a risk factor with holding somebody or a stock like Meta. Is it a bit too big of a percentage holding in my portfolio? Maybe. And it's gone down a little bit. So I don't think I'm going to buy any more Meta soon. But I also don't think I'm going to sell, and I'm still bullish on Meta as a whole. I believe, they'll be around for a long time, and they'll continue to grow revenues and produce really high quality technology. And I'm realizing this video might be a lot longer than I want, so I'm going to try and keep it brief, but yeah, we'll see how this turns out. Palantir. So Palantir is a data management company. Again, has also kind of grown into a bigger holding in the portfolio. I have 160 shares at $8. It's currently trading at 20. I'm comfortable with the position that I have in Palantir right now, and I think they're really poised to take advantage of the rising demand for software in the AI world and the AI data management world. They have government contracts. They have private market contracts. I believe in the founders, Alex Karp, and I believe Peter Thiel is also a co-founder. So awesome team at Palantir. They have really good branding. I think they're going to be the software that ultimately ends up running on the hardware that a company like NVIDIA is producing. Bit of a growth play. It's a smaller business, but I'm comfortable having it as a long-term hold and a high percentage holding in my portfolio. And some people might look at all this and think, it is a tech-heavy portfolio. And somebody count how many times I'm saying portfolio, but I have a lot of tech stocks, and typically I've been that way through history. I'm a electronics engineering student, and I'm a technologist, so I believe in technology. I believe in the growth potential of tech businesses like Google, for example. I use Google every single day and their products every day. I watch a lot of YouTube. I have a job where we use Google Workspace. Google Drive is huge. Just the name Google it's such a household name that I can't see, again, this company going anywhere anytime soon. They have a lot of cash on their balance sheets, and that's kind of why I hold Google. Apple, I think Apple, I think they produce the highest quality technology products in the world, period. That might be a hot take for a lot of you Microsoft fans out there. But, I'm recording this on a MacBook. I have an iPhone. I have an Apple Watch. I have AirPods. I'm the type of person that's really deep into the Apple ecosystem, just like, a lot of people out there. And I'm going to be buying the next iPhone. I can't see me ever really moving away from the iPhone anytime soon anyway. Yes, their iPhone sales have dropped, but I'm just a really strong believer in Apple, and the quality of products they produce, I think, is the best technology products in the world. So JP Morgan. JP Morgan, again, is a little bit of a stability play. It's just a bank. Bank stocks typically move with the economy. I think JP Morgan has gone down a little bit recently. I think it was up over $200. But everything's kind of been crashing in the last week or so, which has kind of prompted me to really look into my portfolio again. And, it kind of led me to make a video like this because I was searching around YouTube and didn't really see much out there of people going through their exact holdings in a tax-free savings. So, yeah, that's kind of where the idea came from. But JP Morgan, it's one of the biggest banks in the United States. It's probably government backed. Like if they ever fail, I think JP Morgan does sit in that category of too big to fail. And I think it's a safe play. They pay a dividend, and it kind of adds some value and stability to all the other holdings. Nike is the newest position that I started adding in the portfolio. Just started buying it at $92 USD, I guess, as well. Most of these stocks are listed in USD. I have one Canadian holding, which probably you guys might not know what MDA is, but I'll get there. Nike, to make it a little bit quicker, it's a household name. Everybody hears the word Nike and they know exactly what you're talking about. They sponsor the biggest athletes in the world. They have some of the best sports equipment, apparel in the world. I run in Nike Vaporflies, best shoe I've ever ran in. I have a pair of Nike Dunks. I have Nike clothing. It's a company that I use their products. I think they have a really strong brand. They support athletes. And, their stock has been struggling for a little while now. But I think they'll turn it around, and in 2 to 3 to 5 years, their stock could be up over $150, honestly. PayPal. So, yeah, we start to get down into a couple L's down here so far. I started buying PayPal when it was crashing in 2022, I think is when stocks really started to crash. PayPal, how they have the two biggest financial transaction apps in the App Store. And across the world, it's a really well-used platform internationally. I personally don't really use PayPal all that often. I have used it in the past. It's one that I want to do a bit more research on. It's obviously a position that I'm down pretty big on. One of the biggest, some of the, what percentage am I down? Down 50%. That's not good. You want to try to avoid that at all times when investing in stocks. It does happen. And, compared to all these other returns, you're going to get a few stocks that don't perform as you expect. That's just the way it is. And you have to stomach that and learn from your losses when you're buying stocks like this. But I haven't sold out of the position yet. And I'm almost tempted to buy more because they do, like, when you look at their financials, they're just a really strong, solid company that's projected to grow. And yeah, I can't speak to it too much. I need to do a bit more research on how it's looking lately. I did a lot of research on it when I first bought it. But yeah, that's obviously one of the bigger positions that I've lost a lot of money on. MDA is my only true Canadian holding. Smaller percentage, obviously we're starting to get into smaller holdings down here, like 2%, 1%, even PayPal's under 5% holding. But MDA, it's essentially the NASA of Canada. And I'm a technical person. They build, so I like the space industry. So I am a fan of the company, and they're really small. I think it's like a $2 billion market cap on MDA, and they just build really cool products. They do satellite imaging, they do space electronics. They built an arm for the International Space Station, and they're a leader in the market in Canada for sure. So it's a company that I also want to support and they have a mission that I agree with and can get behind. So I feel comfortable being an investor. And I do believe in the growth potential of MDA as well. I would be interested in building out this position to be even bigger for sure. Upwork. So Upwork, obviously, again, taking a bit of an L on Upwork. I started buying it the same time that I was buying PayPal. But I do believe in the freelance economy on the internet. I think it's huge. I was looking at Upwork's investor presentation a few days ago, and they're still growing. They're growing their enterprise market. They're growing their just freelance consumer market. Yeah, obviously, I'm down a lot on it, but I haven't sold out. I don't know if I'm interested in buying any more Upwork, but and if I did sell it, I'd probably shove that money into a place like Nike, where I do have more conviction on. But I'm comfortable not selling out yet, and I don't think I'm gonna buy any new shares anytime soon, though. Lemonade is another one that maybe you guys haven't heard of. Maybe Upwork too. Upwork's just like a freelance economy website, but Lemonade they're an insurance business, and insurance is an industry that I think definitely has room for innovation, and it's a big old corporate slow machine typically. uh and Lemonade kind of brings a fresh take to insurance, which is why I think it's an interesting business, and why I'm interested in being a shareholder. uh and they essentially, they take away a lot of the red tape, and they try to simplify the insurance process. And I think they only operate in the United States, maybe Europe. They don't offer their products in Canada yet. But again, really small holding. I only have 30 shares, and it's like $15 a share, and my cost base is 30. So, uh, yeah, that kind of sums up, I guess, to give like a really brief overview of all these positions. I could go deeper into each of them, and I could definitely make a full video on all of them. And a full video even on like allocation and how I decide, how much percentage I want to allocate towards ETF or stocks or growth stocks or value stocks. But that's a very brief overview. I think some people could find this pretty interesting because, I didn't see many videos like this going over like what they specifically are holding inside a tax-free savings account in Canada. So that's what it is. That's what I got at 24 years old. I've built a $37,000 tax-free savings account. With inside this account, there is $34,000 of contributions. I don't know if I'm going to be adding to this tax-free savings one though anytime soon. Any new money that I'm putting towards investing is definitely going to go in my first home savings. Because that's a relatively new account, and hopefully I can buy a house soon if like goddamn prices come down a little bit, hopefully. But I guess we can touch on the RSP account. Nothing very exciting in here. Relatively good returns though, for buying VOO. It's the only holding in the whole account. It's again just a safe ETF with a low management expense ratio that I think is just a smart hold. And I don't really know if I'm interested in buying any stocks in this account. We'll see. Probably won't really touch this one for a little while. So yeah, that's the RSP. This one is an interesting thing about the RSP though is it's tax deductible, but also the first home savings. So this is the smallest account that I have. And if I do end up adding any more cash to investing, it's definitely going in this account. And as the market kind of trends down in the next few weeks here, or has for the last week or so, I think this is probably where I'll be allocating some of that money. And I didn't decide to hold VOO. I decided to hold VIOG, which is it's the Vanguard S&P 600 Small Cap Growth Index. So it's probably more volatile than VOO, a little bit more of an aggressive ETF to hold, but higher growth potential. So, I just thought inside the first home savings account, it's okay to have a little bit more of an aggressive holding. And I might even end up buying stocks in this account as well. But this is where the majority of my energy is probably going to go in the next month or so, a couple months, uh, is looking at building out this specific account. I'm not exactly sure what I want to buy in it. I'm not exactly sure how I want to allocate to stocks, to ETFs. And maybe I can make a video on it. I don't know. But, that's kind of a broad overview of everything. And yeah, hopefully some of you guys kind of found that interesting because like I said, I couldn't really find a lot of videos of people really diving into exactly what they hold. So I hope you enjoyed the video. I hope you got some value out of it. Maybe this was interesting. Tell me what stocks you're buying. Reach out. I'm always interested in having conversations about stocks, what you're buying, what you're selling. So yeah, hopefully this was cool for somebody. Have a great day.